Confidence Friday, and this week the hot topic is the trade war. I mean, there are many hot topics, but this is the one that causes the market to actually fall, and that's where we look for interesting opportunities. So what is happening right now and where are we looking at? In fact, my friends and I were talking about the global e-commerce growth. It is growing extremely fast. E-commerce meaning to say you buy things online. So which stock or which company will perform the best? Well, these are the famous companies called the fangs and the bats. Interesting. So, bats have fangs, but basically Facebook, Apple, Amazon, Netflix, Google, for those listed in US, and in China, Baidu, Alibaba, Tencent, BAT, BAT, and FAANG, fangs. So which company will be the next one to ride on the wave? Very likely all of them. One thing that I personally am not really highly vested in any of this is because of the high valuation. If you look at their P ratio, many of them above 20, 30, or even 60, So, well, I know that when you look at Warren Buffett, he just bought into Amazon. I mean, not him. Berkshire Hathaway bought into Amazon because of Tom Cobbs. But for me, I'm still going to stick to certain principles of going for high dividend. So where do we look for e-commerce? This is the place, credit cards. Well, you know that regardless which website you go to, like purchase certain things, you will still need a credit card. Even if you're using PayPal, you will still need certain credit card processing powers of that. Well, there are many alternatives. You can use Bitcoins, you can use many other ways. I think credit card is going to ride on the wave of e-commerce. So there are many alternative ways of paying, but most of people are still using credit cards to actually pay. So what are the big players in the credit card industry? Let me show you something interesting. This is the information I got in 2014 market shares. I couldn't get more updated ones, but let's look at the trends, okay? We can see that the big boy is still Visa, followed by Master, then UnionPay, Amex, Diners, and JCB. The interesting thing that I want you to take a look at is the chart below. Can you see in terms of growth from 2014, or rather 2013 to 2014, 1 year growth, the one with the highest growth rate is UnionPay, 52.3%, whereas the rest also growing, but not as much. Now, let's take a look in 2015. In 2015, you will realize this dude, UnionPay, is increasing in terms of market share in a very aggressive manner. In fact, the change in percentage of market share from 2014 to 2015 is 300%. They are catching up really fast. I do not have the latest data, but I got a feeling that they'll be growing at a very fast rate. So the topic for today is to invest into UnionPay. Now let's go and take a look. The unfortunate thing is this: as I did my research, I realized that UnionPay is not listed. So what is the next best thing we can think of? I begin to think of, are there listed companies which I can invest in and they have a stake in UnionPay? So I went to dig in further and try to find out who are the shareholders of UnionPay. The interesting thing is, this information is not readily online for certain reasons. There are some websites that is in Mandarin, and good thing that my first prime minister of my country forced me to, I shouldn't say forced, he had the foresight of really making us study our mother tongue, and I can read some Mandarin, but what I understand is there are 85 shareholders, out of which, when you dig in further, the biggest shareholder is actually the People's Bank of China. Now, so I thought, I can invest into the Bank of China. But when I researched more into it, I know, by the way, Wikipedia is not the most accurate source of information, but I did a number of a reading. I realized that People's Bank of China is not to be confused with Bank of China. So I realized it is not the listed company that we can invest in. But when I dig in a bit further, I also found that from this article, they also mentioned that most of the shareholders are other banks. Okay, most of the shareholders of what's that called? UnionPay are other banks in 工农中建, so in construction, central bank, agriculture, and also commercial. Wow, good thing my Mandarin is okay. So what I wanted to do was to go and look into the banks in China to see which is a good bank to invest in, because I believe that UnionPay, or I believe in the finances in China, will continue to grow. This is my opinion, and you can have your opinion as well. So one of the top banks in China, Icbc Bank. Icbc Bank, right now, dividend yield 5.18%, book value 0.74. when I look into the finances, very interesting. You can see the revenue has been growing steadily, more than doubling over the past 10 years, almost tripling. The payout of the dividends is also slowly increasing, and very healthy payout ratio, about 40% to 30%, 20-something percent. So something very enticing. The thing we have to take note of is the currency is in Chinese yen, whereas this particular stock that we will be investing in is in Hong Kong dollars. So make sure we do our exchange rate study and make sure that the dividend yield is actually accurate, because there are a few things to be concerned about. Now, I compare ICBC to other banks, for example, Bank of China. Bank of China, actually, the valuation is more attractive. You can see 6.11% in dividend yield, and price to book is 0.56. Okay, this is screaming undervalued. Let's take a look at the finances. The finances is also very healthy. You can see that it doubled over the past 10 years. It did not grow as fast as ICBC. In terms of earnings per share, also increasing, and payout ratio also very decent. You can see about 30%, 20%. Initial days, there are some like 71%. But you can see also a very good dividend stock. So I went on to dig further into the top 4 banks in China, which also consists of the China Construction Bank, and as well as the Agricultural Bank of China. These are the top 4 banks. So which one should I invest in? And each of them, they are listed both in the China Stock Exchange as well as the Hong Kong Stock Exchange. So for the Agricultural Bank of China, currently dividend yield 4.97, book value also pretty decent, 0.76, decent in the terms of it is undervalued. And for Construction Bank, you can see that the dividend yield 5.55, price to book 0.7. All of them are so attractive. One strategy we can do is to apportion some money into each of them. Okay. One thing to note is Construction Bank, their earnings per share, it's not really growing as fast as Bank of China or ICBC. In fact, it is stagnant. It fluctuates. Okay, it grew except for this year. And also let's take a look at Agricultural Bank of China. Also growing. So you can see all 4 banks, they are growing quite decently. So I found maybe one possible idea that you can go into is to go for the financial ETF of China. So this is my pick for this week, I would say. I'm picking up chicks, okay. So, am I? Now, CHIX is a ETF for China financials. What does it do? It's actually an ETF that buys into China financial stocks. The price right now is about $15.97. It's listed in the US, do take note of that. And right now, you can see they are holding 63 companies or 63 stocks, and their dividend yield is 4.23%. Now, this is a useful tool if we cannot decide which bank should we invest in or which China financial stock should I buy, but you're actually confident in the financials of China, or rather you're confident in the financial companies of China. So these are the top 10 holdings. You can see they have Ping An Insurance Group, which consists of about 10% allocation. Bank of China, Construction Bank, ICBC, and Agricultural Bank is all within this ETF, and they have many other banks. And I suspect, again, there's no confirmation, but strongly suspect most of these banks, they hold on to UnionPay in some way or another in terms of their shares. Okay, so this may be a possible idea to invest this week. CHIX. The downside is this: because you are investing in a US listed ETF, they will have some tax implication, because their distribution yield, which is their dividends, will be subjected to the 30% withholding tax. This is something that, so there's a price to pay if you want it to be convenient and you want to form a portfolio immediately when you buy CHIX. If you want to go for individual stocks like Hong Kong listed ICBC or Bank of China, which is the cheapest right now in terms of dividend yield, about 6.11%, this is Bank of China, you will not face the issue of the 30% withholding tax. So it's really your choice. Personally, if you have enough budget, you can buy into each of them. Okay, you can see that the price right now, most of them are affordable. This is $3 and CHIX is $15. You can allocate, maybe let's say you got $500 to invest or $1,000 to invest, allocate into all 4 banks plus this ETF. Okay, so this is my idea for this week. I hope that this is something that is useful. And So I hope that you've been enjoying Dividends Friday. We'll be coming out with more new ideas. So stay true to Financial Joy TV and remember to subscribe, share with your friends, and click on the notification button. I'll see you next week with some more interesting ideas. Cool. Catch you.